Good morning, everybody. Nice quiet start to the week as we get trading underway. Nothing going on, absolutely quiet. No moves going on whatsoever. Morning, Kay. How bored are you, mate?
Good morning, Ryan. Yeah, let's call it a week, mate. I think we've seen it all already. Yeah, exciting markets.
Yeah, you could say that. Certainly good to wake up for, well, we all started last night, but certainly good to wake up for another bit of vol this morning. All well
Yeah,
and good. And yes, Derej, even my happy hammers managed to win over the weekend. So, yeah, it's been a bit of a spiffing weekend so far. I've had a great week today. Right, let's get stuck into it. But before we do, you could have earned some real decent pips if you've been in our chat room for the last couple of weeks following all the news that's going on. A lot of people have been doing that, taking up our 40% discount. That's still ongoing. Be quick. We've still got plenty of volatility, plenty of changing markets to navigate through. So if you want to get up to speed and everything and get the best support you can for your trading, take advantage of that. 40% off our monthly subscriptions. Get them while they're hot. Right, where do we start? I'm going to start with a bit of boring old data just to kick us off. And amid all the news, just a bit of a reminder that, and potentially one of the reasons why we're getting all this trade talk, is that China inflation, anyway, is still down in the dumps. Got another negative print, minus 0.1 year on year. The PPI also coming in as another negative, down 2.7%. So on the inflation front, things are still very soft in China. This morning, we've had BOE's Lombardelli saying that underlying inflation pressures for the UK have continued to fall, and it's sensible to continue the gradual pace of cutting rates. Going to have a quick look at Canadian data last Friday. Just quickly, the jobs data there came in slightly better than expected, turning around the drop we saw last month of minus 32.6. Positive for the full-time employment. There were some losses in the part-time. Unemployment rate went up 6.9. Some of that might be due to the participation rate rising. Okay, Canadian jobs market had been on a bit of a strong run at bubble burst last month, but we're back on the positive note this month. Canadian swaps markets after that data saw a 52% chance of a June rate cut. That was up from 46% before that jobs data. So the market seeing that as a little bit worse, particularly on the unemployment rate. So we're just over the 50% mark for a June cut for the Bank of Canada. Fed's Waller was backing up his mate, saying there is more economic stability if central bankers cannot be removed. Right. I haven't bothered to take most of the stuff from last week because it's all pretty much redundant given all the news we've had so far this weekend. So unless you've been living under a rock or your alarm's just gone off and you're just waking up, we have got the broad outlines again moving towards a trade deal. We haven't actually got a trade deal, no matter how it's been spun at the moment. What we've got is a bit of a pause, a 90-day pause, where tariffs have been cut by the US from 145% to 30% for 90 days. China is also lowering tariffs to 10% from 125% for 90 days. That was all kicked off by Besant and China over the weekend, coming out and saying that they've had good talks over the weekend, probably more bullish than we expected them to be, or certainly more than I expected them to be. Then Besant was out this morning as well, just going over the details. One of the main points that there was no discussion on currency. Trade Representative Greer said upon the toughest part of negotiation, it was trying to repair channels of communication from the past administration. Besant said we have a very good mechanism to avoid that unfortunate escalations can happen again. Also said that the UK and Switzerland have moved to the front of the queue for trade deals and the EU is much slower. On the Chinese side, Vice President Li Feng said that both China and the US have agreed to establish an economic and trade consultation mechanism that would involve recurring discussions. So everyone's been touting a deal, but the deal so far is that they are going to talk and they're going to negotiate, sounding pretty regularly, but we have not actually got a signed, sealed and delivered deal. So there is some risk that things go a bit wobbly down the line and the market gets a little kick up the arse in getting too bullish right now. But as I say, the fact of the matter is, we weren't expecting much from these weekend talks. Maybe the promise of continuing to talk, but we have potentially got a bit more than we were expecting, and that's why the market is in a much better mood. But adding to that, we have got some other things going on as well. We've got an India-Pakistan ceasefire, which was pretty sudden. I think like Friday over the weekend. So that came out. That's another thing for risk. And we've got the potential for a 30-day ceasefire coming from Ukraine and Russia. We've even got Hamas playing nicely, and they've handed over the American-Israeli Eden Alexander, who's been subject to much talk over that. So everywhere you look, there's a better risk this morning, and that's being reflected in markets. Now, we've had some moves, obviously, in a lot of pairs, some big old moves. We're pausing at the moment, running out of puff a bit, but you need to wait to see what the Yanks do when they come in, because they will be reacting to this almost afresh from what Besant has said this morning. So that's where we're at right now. Okay, your thoughts, mate?
Yep. Much more positive than we may have feared from the Chinese side, and then you add on those ceasefires and stuff, and it's not really a surprise how the market is trading it right now. Very, very positive on risk. The fact that they didn't slam or break the negotiation table from Chinese side is definitely to be understood quite positive. We're basically back to, what is it, pre-liberation or just slight liberation day tariffs. There's nothing being said yet in details about how it's going to work, but yeah, I think the reaction that we see is logic. I would say logic for 90% of what's going on. There's a small percentage where I don't really fully agree on the market moves, but okay, it is a very positive development, and yeah, that's where we are right now. And as you say, the US is probably going to be trading this positive as well. If we look at it in the global picture, it's kind of as most of us expected, like hit everybody hard and then ask if it hurts and come back, and then everybody can call it a victory. I don't know how it's going to work. The thing is, somewhere, okay, Besant and the Chinese delegation officialized their talking, but somewhere it's just they may actually keep the same people on the negotiation teams as the work groups that were already in place before the Trump administration took office. So has a lot really changed? Remains to be seen. Has a lot changed versus what we were trading last week and the week before? Yes, because de facto those tariffs are not going to be put in place. Chinese will continue, whether it be on with quotas or something, will continue to export. U.S. companies will not have to add all those levies on top of their import costs. It is really a positive development in the short term, and that is something that we can't look besides, because this is what the market is trading. What is notable is that actually U.S. yields are up, and people are still thinking about a bit of inflation, or is it already that the market is already turning towards tax cuts and what other deregulations are going to be inflationary? But ask if you would have asked me last week, what's the impact if US and China have a deal? I thought yields would actually be lower because a part of the inflation pressure is going to be taken off, but the market reacts completely to the other side, probably thinking that now US companies will be able to continue to import, albeit with an additional 30% or maybe not even 30% on top of some of on some of the goods. So that is probably the move in yields, which I needed a bit of time to find out why exactly yields were higher.
Yeah, it definitely looks a more risk play than fundamentals, what it means for inflation and whatever. But that's, we've been saying it for the last couple of weeks. It definitely looked like things had turned. The mood in markets, or the price action in markets, had changed. We couldn't go lower in the dollar. We couldn't go lower in stocks after the initial reaction. We needed a catalyst. And what happened? We got the catalyst the other side, where we got better than expected news this weekend. And that's just been a green light for this risk bounce to continue further. But, it's easy to get stuck in the day-to-day stuff, but we've been saying it since January. The idea is for Trump to get deals done, not to have tariffs. And we've gone through 3 months, 4 months, maybe going to be 5, 6 more months of noise. But the end game is still there, not to have tariffs in place, but to have deals and have a better crack for US companies. So what happens there? How far can this go, Kay? Because, we haven't got a deal yet. The market is reacting to the news. Do we just let the US guys do their thing in a moment, in an hour or so, and then take it from there?
I reckon they will probably trade what we have been trading this morning. Apart from corrections, I don't see why we should all of a sudden reverse anything. So yes, I think they will continue. It is Besant continue to talk about the trade imbalance, right? And I think that's where we will have to see how far China is now ready to come to meet US to their demands. So what are they going to do to reduce to completely reduce the imbalances? Is it going to be on energy import? Is the US going to export a lot of energy to China because they need it? But then we need higher oil or gas prices to make it interesting for the US to produce energy. What else are they going to do to really reduce this trade imbalance? Because putting quotas on Chinese stuff is not really going to solve the complete imbalance, right? Because I mean, if China doesn't take more US products, okay, it could be meat, could be agriculture perhaps. We will have to see what the deal is actually going to look like. So that's going to be, I guess, the main one. And if they can strike a decent deal, I guess we will see perhaps a further reduction, or the de minimis tax being abolished again, which has been put on. So yeah, I mean, there's still a lot of moving parts. But yeah, in the meantime, it looks quite positive though on the face of it.
Yeah, and I think people have got to be careful right now. A lot of people have seen, big moves in prices, euro dollar getting crunched lower. We've had the gap down, whatever. I'm not one for gaps and whether they get filled or not, but we've had a big move. And a lot of traders come in and go, oh, we've had a big move. I need to try and fade this because it must be bouncing. That's probably the worst thing you can do right now, is to think the account is moved, particularly when we've got the Yanks coming in over the course of the next hour or so and could be reacting. Now, if they come in and we don't get fresh lows in the euro, we get a test of, you know, the 110.90 area and it holds, then maybe you've got a bit of a case to say, well, if the Yanks can't make fresh lows in all this or fresh highs in other dollar pairs, then maybe we aren't going to see that. But we have definitely now had a light switch moment where the market is in a different place. All those people who are expecting the US economy to roll over are now probably rewriting their forecast for all-time highs in stocks. Okay, it could be one of those light switch moments. So don't get sucked into thinking, oh, this is all going to reverse and it's going to happen. And because people will be trying shorting all this move down from 112 and coming unstuck. So let the price action develop, see where the bottoms and tops are going to come in before you start to try and attack those. So be very careful today. Speaking of which, we've had some rate cut expectation changes to do with all this. Now, a lot of this is probably just mechanical based on the price moves and the volatility we got, rather than people really thinking that rate expectations are changing. But anyway, for the Fed, we now see, for the ECB, we now see less than 50 basis points of cuts by year end. We're up around a 3-cut mark previously. Bank of England, also less than 50 basis points of cuts by year end. 2 weeks ago, we were pricing in 100 basis points of cuts before the Bank of England cut last week. Now they see less than 2 more cuts. Fed Fund futures show 56 basis points of cuts by December, so roughly 2 cuts by December. That was down from around 75 basis points, or 3 cuts on Friday. Now, Kay, I've got a question to ask you, because I think, and it's something I've been saying, you've got to look at the fundamentals outside of the trade uncertainty and what those are doing irrespective of Trump. Economies like Europe, economies like the UK, even the US have been softening. Okay, the US hasn't been falling off a cliff like people expect, but it has been softening. So if you take away the uncertainty, you've got to think of what central banks would be doing without Trump and all that noise. I think there's a greater chance of the Fed now cutting rates than less chance as the market expects if this uncertainty is being removed. What are your thoughts on that?
I think it's difficult to look beside, because we do have it, and I don't think you can. It's part of the fundamentals now, and it's part of the what the market is looking at. So it's I think it's too tough to take it aside and or to put it aside and say what would they do if not, because it is there. It's not something that has been put and then taken away without impact. There's a lot of yeah, I mean, people hired and fired, plans made and undone. So it is a fact, but the Fed has now a bit over a month to, and unfortunately, most of those data will be pre this weekend. This weekend meeting, so they may not even get what they want to see in the hard data. But if they get a confirmation this month, I mean in the next month, the next meeting is what? Let me quickly check. 18th of June.
Yeah, mid-June.
If they get what they feared, and that is a slowdown of jobs or whatever over this period of uncertainty, they probably will do a little cut. But where I think the difference may now lie, sorry, if we would have had all those bigger tariffs remaining, we would have had a very big risk, in my opinion, that the US economy would kind of fall off a cliff. And that is something that is now less likely. So I reckon that pricing out a potential potential bigger cut needs to be priced out, and that is likely what we are seeing now. Because and I was on board with that, is that if they keep all those tariffs and the negotiations with China don't go well, I think there is a risk that they have to do a 50 BP sooner or later at the Fed, because the economy is going to really get hurt. I think that is now something that we need to price out. So this perhaps that explains kind of as well the yields are going a bit up today, and that is something that we need to price out. But whether we can get this cut now again for June we will see in the data. I'm not ruling it out. If everybody is pricing July, but then why not do a if we get softer data, why not do a sympathy cut in June and then go back onto wait and see? And then you still have meetings later on to see if something starts to happen in the second half of the year, whether the economy stands up, zooms on, or whether we really see weaker data. But then they can again have a bit of a pause, right? If they cut, obviously they don't need to cut. If you look at US assets, I mean, there's no need to go and underpin S&P or Nasdaq, for instance, right now. But there may be a case coming where they do a 25 and then go again on pause.
Yeah. Well, I mean, I've been saying that I think, if the uncertainty continues, then we're going to start seeing the data really rolling over,
Yeah,
between the next
definitely.
1 to 3 months. But even if this uncertainty gets removed, I still see a case where we've got a bit of a catch up in the hard data. We're not collapsing, but all the sentiment survey, all the PMIs, they lag. We maybe start seeing some of that reaction coming into the data. It may only be a blip, but right now the market could be, yeah, great, we're going to get a deal. And then next month we see the hard data rolling a little bit because it's lagging reaction to what's been happening in the last 3 months from the private data. So I think and then the market's going to go, oh shit, the data's starting to go. It's doing its pendulum goldfish thing again. And I think all roads at the moment lead to lower rates because the Fed still don't want rates above 4%. And two, the economy was softening well before Trump even got in the door. Okay. It was doing that before Trump got in the door. So whether he's helped it along a bit more with all his messing around with trade, and that's fine. But it wasn't going massive guns before he took over. And I think the Fed was cutting, and they want to continue cutting. And if they get that uncertainty out of the way, I think again, I don't know if it's going to be June or July, but I think there's a risk the market gets too undovish on the Fed than it needs to. And if that's the case, then that's a potential trade to look at. But we shall see. We will know by the data. Speaking of which, we'll have a quick look at what's coming up this week. We've got a few big pieces to look at. We've got CPI data tomorrow in the US. Nothing on the data front today, but tomorrow we've got CPI data. So that's going to be something to keep an eye on there. If that's another soft one, the market's going to swing again. If we get a soft one there, we'll probably price in 75 basis points again tomorrow. So go on, mate.
Yeah, it's unreal because this thing should actually now be irrelevant, where we said April data will be very important. So, I mean, if US and China come up with something, whether it's good or bad, I mean, your inflation report you can throw it in the bin as well, right?
Well, you can do unless it gets inflation back to target.
Yeah, that's true.
And then the market's going to go, oh, hang on a minute. The Fed are getting inflation back to target now, and that puts them up. Anyway, the thing is, we're going to get these swings. As I say, today everyone's bullish and less Fed cuts. Tomorrow we get a soft CPI data and we're back on cut watch again. So that's the markets we're in at the moment. You swing from day to day. Anyway, we've got UK jobs, whatever that's worth, given that the data is less than reliable, but we're going to react to the numbers anyway. And I don't think I mentioned it, but last week the head of the ONS has stepped down. I mean, I'm surprised he didn't get fucking fired months ago, let alone allowed to step down, but that's a different argument. So changes are afoot at the ONS. So anyway, jobs data tomorrow. Zoo survey data from Germany after that. Again, could be a decent watch to see if we get in any increase in confidence from German firms there. Wednesday, PPI data from Japan, and then we get the final German CPI numbers, but otherwise a fairly quiet Wednesday. Thursday, we've got Aussie jobs. So if you're trading the Aussie, keep an eye on that. And then we get some GDP data from the UK, industrial production and whatnot. See if the good news from Q1 can continue. All these CPI datas are all final numbers for April, and this GDP from Europe will be a revision. So again, probably passing under the bridge. Retail sales on Thursday give us something to get our teeth stuck into. And then we start getting the first manufacturing data of the new month. Empire State. Oh, it only seems like yesterday we had the April Empire State, and now we're already kicking off with the Philly Fed and the Empire for the US manufacturing. Again, this data will obviously be well before this weekend trade news. Manufacturing's been down in the dumps for a long while, so maybe we shouldn't expect too much from that data. Industrial production, bit of inventories and some housing data later on Thursday, and then we get the flash Michigan numbers and some other housing data from the US. So we'll see again that consumer sentiment data will be missing this weekend stuff. So it's not going to reflect any survey data. So we'll see in the following months whether this sentiment data that we've seen from US consumers is going to improve on the back of this trade talk going on. But otherwise, market might ignore a wobbly one from that one. Overall, not a huge amount of data, but no doubt we're going to have plenty of headlines to keep us on our toes anyway. Right, that's it as far as I can tell what the headline front, anything that's important. Unless there's any news, Kay, you've got need to bring to our attention.
Japan, Ishiba still hammering on the fact that they don't agree at all with any tariffs from the US onto Japan, and I think that may have helped the yen also to weaken a bit more rapid than other currencies, and that is something we still need to keep an eye on. We are in this period off. So the yen, expect them to remain volatile. Just watching the positions, they don't seem to have been reduced that much yet. Of course, we don't have the data for the end of the week last week, but if you look at the other data, speculators were still pretty long yen. They may have to swallow their pride a little bit, I think.
Yeah, always possible. But I know you and I don't pay that much attention to that position in the future side of things, because you don't know what it's on for. Could be hedges for options and all sorts of stuff going on there. No. But anyway, so here we are. Big rally in dollar yen. First and foremost, it's breaking through the levels. And again, another reminder, you've got to be careful when you get big headlines like we've had today. Headlines don't give a stuff about coloured lines on charts. Okay, so be very careful. What we have to do is, as I say, you go through your levels, maybe go on a wider chart, a 4-hour, daily, whatever. You find your wider levels. You think, right, if this move is going to run into trouble, where is it likely to run into trouble? We've already seen a 150, 200 pip move off the face of it, and then it's kept going. So we're already moving. So you pick your levels. 147 was an important level. We were saying last week. It's nothing now because we just carved through it like a knife through butter. But if we get any pullbacks from now, that's a level you need to look at. If we pull back to there and hold it, then it's going to at least keep this continuation going. And now we're starting to really look to attack this trend from the year. Big level above is going to be up to 148, 80, 90 into this 149 zone and the 50. That's going to be a big level, big old zone up there to see if this news is going to continue. Can it get through there? I wouldn't be surprised if we see maybe a push up during the US session to that area there and then potentially running into trouble. And then we see what we want to do. So really be careful. You can't be really trading this on a 15-minute chart at the moment. unless you're really small size and you're really fast and you're really just scalping it around. Sit back, let the price do its thing, find out where it wants to top. Okay, we've had one high, 50, 148, 20, where are we? 22, 23. Okay, if the Yanks come in and we see a rally and we can't get through that level, well, then you've got a couple of attempts at that high and it can't get through. Now you've got something to lean on if you want to try and fade some of these moves. But just be careful, because you think, yeah, I'm going to short here, and then boom, you're done, and you try the next level and boom, you get done. And it's a dangerous game to play. Wait for the evidence that the price is topping or bottoming, and that means making those highs and lows over a decent amount of time. You don't need to rush into this stuff. Okay, but things aren't things that are going at different speeds. They aren't all going at the same speeds. Quick one, dollar CAD. You know, again, solid move. We're up through the zones, but we've hit a decent level here. This level, if I can zoom it out, make it clear, this was the old high from here, October 2022. We had plenty of action around there too. It was a break point, and then it became support, and then it became resistance mid-April, and now it's where we're hitting the zone. So this is a stretch point for this move. This is what you got to look for, places where the price keeps bumping its head and can't get through, because that will give you your signs that you've got a top. Are we done? No. But if we hold this on this move, hold it a bit more, then maybe you got a bit of a top in place, and then you can think about doing a reversal trade, or you just wait for a dip. The zone's played up. We've had a dip already down into the zone. It's held, and now we're coming back up again. So if you want to play a continuation of this move, you don't want to be buying it at the top. You either buy a break that confirms, or you buy a pullback. Okay, so don't get sucked into thinking I've missed this move, I need to buy it wherever. Okay, that's not the way it happens. Okay, I'm going to ping it over to you for a couple. Just looking at the old clock, and I want to keep an eye on my trade as well.
Yeah. Okay.
There you go.
Yeah, here we go. I was just, and I know, Ryan, you showed it already, but perhaps for those who are watching the clouds, it's interesting because the Japanese do, and just we need to keep an eye on those daily clouds. We are entering, okay, around 147.80. We are entering here, 147.90. It is not a really huge one, but it is a nearly three big figure cloud. So there could be a bit of activity in there in the dollar yen. But I agree with Ryan. Anywhere low 147s or 146s broken that trend line, we should find buyers now on dips, unless we get time-wise a surprise, but a very fast trade deal, obviously with Japan, because whatever we do now, whatever the market needs to do in Japanese yen, etc., let's not forget that they could come up with something sooner or later. I do think, though, if we look at all the yen crosses, and I will only look at one because I kind of had that one on over the weekend because I hedged the leftovers of my long cable. I hedged it with dollar yen, so this made a run for it. So I'm quite happy. But all yen pairs have broken, and that is risk, obviously. But I would argue it's also people kind of wrongly positioned, perhaps in most of those in the yen in general, and hoping for a swift deal. I guess like everybody else, like me, was expecting Japan to be a no-brainer and a deal done straight away. Well, it's not, and that is helping all those yen pairs to break higher right now. Again, disclaimers all around. If they find a deal, it's probably going to reverse as well. Cable broken through this 132.0510 together with the rest of the dollars, but I'd say we're still and coming back to prior highs, highs where we hesitated a bit but then pushed through. We still and that reflects that sterling is doing better than other currencies right now. We're still above this zone here, and that is 131 a quarter, 131.40. And of course, bigger one would be, and psychological one would be somewhere in the low 130s, one closer to 130, the figure a little below 130. Setback, yes. Reversal of the cable, that's a tough one here because of because of all these sterling crosses. Sterling is doing better than the rest, and we find it back as well in the euro sterling. We went through this 84.5, trying to confirm now through the 61.8 at 84.30. It is still heavy, and actually Besant just said it quite openly and very simply, is that the sterling and the UK are more in front of the queue than EU is. We have to note though that the UK deal is not completely done yet. That there may be other things in play, but also sterling is a risk currency, so it's no big surprise that it's doing better and testifying this euro sterling, yen, for instance, call it sterling, I don't know, sterling Swiss, and for those who are watching it, all those sterling pairs are doing better. But okay, and for the time being, I don't see too much of a reason for it to reverse. 84.5, 50.55 is your level to watch, and then the other one here above, around 84.70.80. If we start to get back above 84.70.80, this move may be done, and we probably going to go more sideways, even go back into the 85s. But for now, don't change a winning team, I would say, and we could have a gradual move, perhaps into the 83, the big figure on the euro sterling, into the 83s. 84, the figure is a bit of a support here, as we have seen as well. Let's see what happens if we get there. Yeah. Oh yes, Derage, was it Derage, dollar Swiss? We're breaking up. Okay, we're breaking up through prior highs. And if you look at it, we started this morning very early on the 83.5 level, and which was a double top, and we're breaking above. So this is bullish. Risk is doing fine. Look no further. This is the yen move, the Swiss move. This is positive risk, but we are already back as well above what could have been as a bit of a flag around 84.20. So I would say watch this 84.20. Okay, we've had false starts in the dollar Swiss. I'm not going to rule it completely out, depending on what the US would do, but I think on the day we should find bids here in the low 84s. Yeah. And if you confirm through 70.80, we could see a move up into the 85.5. Why not go up to 86, depending on how many dollars the US want this afternoon, and the market is prepared to buy. Okay. It would be a big one if this 83, 35, 50 would let go again. I don't think that's in the cards for, at least not today, unless China comes back home and Xi decides that it was actually just a nice lunch in Switzerland and we are not going to do anything. So in the meantime, low 84s should be support. Gold, I'm just going to repeat what I've been saying all the time. Gold is a hedge against things that can go wrong. There's a lot of things that go less wrong over the weekend. Not only the US-China, but as Ryan already said before, we've got ceasefires. Even in the Middle East, it seems that they are ready to observe some sort of ceasefire. We never know how long it's going to last, but so we don't need the hedges. The dollar is beat. Yields are a bit higher, although gold has been shrugging off yields moves. But today it looks like this combination is alive, okay? Meaning that it is possible that we go through this 3210, 3200, the prior low, and have a look at what's happening in the 3160s for a starter. Okay, globally speaking, looking from where we are coming, I just continue to repeat it. We have not. You can break those levels. We could even break 3165 today. I'm not ruling it out and getting a move into the 30s. Where I would look for a potential reversal of everything is there are a few levels. We could argue 3050, we could argue 2957, but a lot of people are watching 2800. But that is still far away. That's $400. Now, they could be done. I'm not going to rule it out. I'm not going to buy dips right now, especially not now, an hour before the US starts to walk in. I guess there is a fair chance that we are going to see further corrections in gold. I would argue in silver it's a bit of a different picture. It did, though, not manage to continue to go higher, but I am surprised, yes and no. The dollar is bid, so we are down. This morning I let the rest of my ads go that I did around 32.50. I let it go because the dollar was starting to be really big. But this little ad, I bought it back below 32. When the outlook is better in the market, I still think that silver may outperform gold. Now, you need to let the dollar play out today, obviously. So we could go down to maybe low 31s. I would say though that I would think that if the market looks at a better thing, the trade deal, silver needs a better environment, as I've been saying so often. So I would kind of think, unless the dollar really rips the head of everything, I would think that we are going to find support around this lower end here, anywhere between 31 and a quarter and 31 and a half. I may give it a try and add to my long terms again, okay? Because I don't think that it warrants a much deeper move right now in silver. Of course, I may be wrong. What else, guys? I don't know really. Yeah, dollar mix is back above that 1950 area, but I would say for as long as we are below here, 1980 or so, I think the overall picture. This is a dollar move. We may have thought that in line with dollar cat, we would have been already trading this higher, but I would still and don't forget there's quite a few Chinese produce going through Mexico as well. I'm not even sure we're going to reach there. I'd love to add to my shorts there, but I'm not even sure we're going to reach there. So this for me is a bit neutral right now. Allow for a bit more dollar retracement probably on the back of the other dollar pairs. But give me 1980 and I'm seriously going to think about adding again. Yeah, Ali, yeah, we've been talking about all those ceasefires and stuff. Yes, oil, it's moving back up. Now, it is positive. It's a positive development. And again, we've seen what happened in a week's time. These low 50s, these mid 50s are very important. We are back here, but as I said the other day, give it a break of 65 before we can really say that it's going, because we had those 1, 2, 3, 4, 5, 6. This is now the 7th time that we are trying to bounce back over the past month, and every time we ran into trouble. Okay, yes, if they confirm that the deal is underway, oil is probably going to continue to go higher. Okay, I wouldn't rule out actually a move back up here to close to 65, just when the US walks in, bit of positivity there. I would not rule it out at all. Okay, and with that, Ryan, back over to you for today, mate.
Thank you very much, mate. Good stuff as always. We'll call it a day for today because I need to get back to looking at the charts and seeing what's what with the trading. So have a good week, everybody. Trade safe. Be careful over this US session. Come and join us on the Faye show later on because we'll no doubt be talking about that as well. Have a great week, everybody, and we'll see you all bright and breezy tomorrow.